Oil is still the mainstay of our energy economy, but prices are rising. In fact, high prices for gasoline and diesel are major drivers of inflation, which in turn is partly responsible for the push to promote electric vehicles. But switching to EVs won't end our reliance on energy. It will just make us trade one issue for another. In this case, as Elon Musk has said, lithium batteries are the new oil. With batteries being the new crude oil, let's take a look at a potential winner in the expanding oil field. Enovix Corporation is focused on creating the next generation of battery technology. Due to the high power requirements of EVs and the demands that EVs will make on power and charging capacities, Enovix is building new technologies to meet these challenges. Enovix is working with a proprietary three-dimensional battery cell architecture designed to increase the energy density of each battery. The groundbreaking architecture and manufacturing have the potential to revolutionize the sector. The company has also amassed a strong sales funnel with endorsements from heavy industry participants. But the company must now prove it can profitably manufacture at scale. Recently, this small cap battery designer has picked up 8 analyst reviews, which are all positive, giving the stock a unanimous strong buy rating and an average price target of $20.64 per share. However, understand that Enovix is a highly speculative stock, as the company has not yet reached a stage of regular production and is still a distance away from true revenue generation. So, it is your responsibility to conduct proper research of the company. And we're now looking at a 3-year weekly chart on Enovix Corporation, and the symbol in the upper left, as you can see, is ENVX. For disclosure, I do not hold any shares of Enovix at this time. Now, we're looking at a 3-year weekly chart simply because the history doesn't go much further back. But as you can see, there's a relatively decent pattern with a bottoming basing, a move on up, a rollover, back on down, a bottoming and basing, a move on up, rolling over, back down again for another attempt at a bottom and basing. So let's look at the oscillators. Moving here with a new stock, you do want to see volume increasing, and that's more or less what's happening here. And into the MAC, again, a nice pattern, relatively decent pattern, and you can see that we rolled over here and we're coming on down to a bottom and basing in this area here. Hopefully a bottom and basing with the fast line starting to close in on the slow line. It's only slightly below that zero line, so there is relative strength, but I think it's getting even stronger with the move back here, moving on up with a slight increase. Moving there to the histogram, we can see pretty much the same thing, much deeper here than it is at the current time frame. Again, the improvement on up. We're nearing in to that zero or midline, so we might cross the fast line, cross through the slow line in, say, another few weeks or so. Same thing here in the price rate of change. Looks like things are improving, making a move on up to that zero line. Nice bottoming and basing here. It's taken its time. You have time as well to study those fundamentals. Here, the RSI looks pretty good, at least with regard to the bottoming and basing patterns. Looks like we're setting up again. We're at a very moderately weak 36.70. It needs to improve, needs to get closer to that mid or 50 line. It needs more strength to push that price chart up. Here into stochastics, it's relatively decent once again with the cycles. Again, here we have bottoming and basing with another potential bottoming and basing, hopefully a move on up. And then the last oscillator coming here is the Williams. It looks like this bottoming and basing is superior, or at least stronger than it was back here. So I think more attention is coming to the stock. It's moved out of that oversold territory, and I'd like to see that head on up, the Williams head on up above that 50 or midline and continue on into that overbought territory, say negative 20 to 0. Things are strengthening, as you can see. Not many eyeballs on this company yet, but I think more will be coming. Back up here to the price chart. Once again, this is a speculative stock, so you need to conduct your due diligence. It's up to you. And for today, that's ChewDog Charts. Thank you.